And that closes today's trading action. All three of the major averages ending the day in the red. You can see right around the lows of the session. Dow off 400 points, S&P off about 0.6%. The NASDAQ slipping into the red in the final hour of trading, closing off nearly 0.2%. Ines was just talking about the sector action that we're seeing today. All 10 of the S&P sectors closing in the red this afternoon. A big reason why we're seeing such losses here in the Dow, a lot of that has to do with Caterpillar. Caterpillar disappointing the street ahead of the bell this morning, one of the biggest laggards in the Dow today. All right, well, another mover that we're keeping a close eye on is JetBlue. Shares of JetBlue falling this afternoon, closing off just around 6.5% on its second quarter earnings report. Now, the company citing surging costs, driving losses to the tune of $188 million. Joining us now to discuss this and the airline's pending deal with Spirit, we want to bring in Yahoo Finance editor-at-large Brian Sozzi and JetBlue's CEO Robin Hayes. Soz, over to you.
All right, thanks, Sean and Robin. Always great to get some time with you. A lot of recession fears swirling around Wall Street and the markets and in consumer land. How did demand shape up towards the end of the quarter?
No, great to be on with you. Look, demand remains extremely strong. The issue in Q2 really was fuel prices and how they run. In quarter three, we're forecasting our first profit since pre-COVID. The revenue environment is very strong, and we continue to see that as we enter into Q4. I think the thing that we have to remember about the travel industry is there's still a great deal of pent-up demand from people who have still not flown this summer that want to make those trips.
I talked earlier this morning, Robin, with Marriott CEO Anthony Capuano. He told me bookings were tracking up mid-double digits for the back half of the year. Are you seeing that type of strength or similar strength in your forward bookings?
Yes, I mean, we guided our Q3 revenue today, and the midpoint of that guide was a 21% increase in unit revenue. So again, we continue to see extremely strong demand. Our load factors are high, and we haven't guided Q4 yet, but based on what we see so far, we see good momentum into Q4 as well.
I think some of the pullback in the stock today, Robin, reflects some concern in the street about high costs. Why are costs so high right now?
Well, if you look at our Q2 result, our unit costs excluding fuel came in actually better than we had guided, and our revenue also came in at the high end. So the story with Q2 was really around a much higher fuel cost than we had expected. We have seen that moderate into Q3 here, which is good news. And as I said, we expect both our third quarter and our fourth quarter to be profitable.
How do you plan to address these high costs and take some out of the business?
Well, I mean, you've seen this across the industry. In fact, we were one of the few airlines this earnings season that didn't adjust their cost guide for the rest of the year. We really did that early in the year. What's really been driving it in the airline industry is some significant reductions of capacity that you've seen versus what we originally intended to fly, including at JetBlue. And what that's doing is, you have all the planes, you'll have a whole airline that you've staffed, but you're not flying as much as you intended to do. And that puts a very significant pressure on unit costs. And so we've certainly seen some of that. As the air system gets more resilient, as we get back to what we've expected to see in the past, a lot of those costs will come out. The other thing we announced today is a new structural cost program as well that will allow us to take out a significant amount of cost over the next 2 years and offset some of the cost headwinds that we still see in terms of labor cost and airport costs and other things.
You look to be the winner for Spirit Airlines after a very, I would say we've talked to you throughout this battle, a bruising battle with Frontier. How do you plan to get this deal past regulators who have come out concerned about a JetBlue and a Spirit really dominating in key markets?
Well, a JetBlue and Spirit isn't going to dominate in any market. I mean, we'll still be an 8-9% player in the US. You have 4 large dominant airlines with around 20% each. So what we're doing here is creating a viable fifth airline to help compete, to help keep fares down. We'll still be less than half the size of the big four, so I don't think there's any concerns there. And in terms of airports like Fort Lauderdale, for example, where we will have about 50% of the gates, we've offered proactively to make divestitures to allow other competition come in. But even in Fort Lauderdale, with our 50%, there's still over 20 airports in the US where you have an airline with more market share than that. So again, I think we have to keep this in perspective. We're going to work through the regulatory process. We expect it to take some time. We know there has been concerns this administration has discussed in terms of airline mergers. But the way we make this industry more competitive is to empower a bigger JetBlue, and that is our plan.
Robin, last week I talked to Frontier CEO Barry Biffle, and he told me that your combination, if you combine with Spirit, it will lead to 40% inflation for consumers. We'd love to get your response to that.
Yeah, I mean, I don't know where those numbers are coming from. What I do know is when JetBlue flies a market, we bring fares down across the whole industry because all of our competitors to match our lower fares. We are a positive disruptive force in keeping fares low. We've been doing it for 21 years, but we also don't believe in nickel and diming customers either. So, we want to offer low fares, but we also want to make sure that they have leg room, that they can have access to free Wi-Fi and free live TV. And I think that's very important for people as well. So we want to be about the airline that's about low fares and a great experience and not make customers have to pick one or the other.
There's been some talk in D.C., Robin, about fining airlines for canceling flights. Frame this for us. If that were to happen, what type of chaos would that cause in the airline industry?
Well, no airline wants to cancel a flight because it's always costly to cancel a flight. The largest single cause of flight cancellations, at least for JetBlue, is the weather. And I think it's important that we do cancel flights during bad weather. Now, what airlines can control and what we've got a lot of focus on is making sure that we run a better operation on the days when we're not impacted by weather. So certainly in April, we pulled down our capacity significantly to make sure that we were more realistic about what we were flying for the rest of the year. That's gone well. Our completion factor in July, for example, which is a measure of how many flights are we actually completing, was very close to our completion factor in July 2019. And of the flights that we weren't able to complete and canceled, the biggest impact, the biggest reason for those cancellations were weather related. And because when weather comes in, what air traffic control does is they reduce number of flights that can take off and land at an airport. And when that happens, you have to cancel flights to stay under that cap.
All right, we'll leave it there. We know these are busy days. JetBlue CEO Robin Hayes, always good to see you. Thank you so much.
Thanks, Brian.